Hello traders, Gary Wagner here, just before 12:30 in Honolulu, 6:30 in New York. It is Wednesday, December 5th, 2018, and this is the Daily Report for Gold and Silver. In quiet trading today, we do have gold trading marginally lower, down about $4 currently, with most active February trading at $12.4260. Silver also taking it lower today, down by about 8 cents, trading at $14.56, and platinum also losing some ground, down $2.90 at 801.30. The only precious metal to buck the trend today has been palladium, up $3 at 1183, and that is all within the headwinds of a slightly higher dollar index, which is up about 10 points at 97.005. Of course, in honor of former President George Bush, his funeral today, the equities markets as well as some other financial markets were closed. So traders, although trading was subdued today, gold currently down about $4 at $12.4260. We did send out a special trade alert, and I've just put that up on the screen. We recommended covering one position in February gold, pulling profits, and then raising our stop on the remaining position. And I wanted to explain the rationale behind the move today. As you know, originally, when we went into this trade, we got in December, we rolled that over, but we got in roughly at this breakout point here, just at about 12.18. As the market went up, you know that my original target had been about 12.46, and that is based upon the 50% Fibonacci retracement that we have identified right in here. I said that my next target above that would be 1261, and that was based upon the 200-day moving average. Yesterday in trading, we had the market actually track above that price point, but close right at the 50% retracement, which told me that we could potentially see some resistance here. When the market opened up lower this morning, and the open is at the top of this red rectangle, and then began to trade lower and then recovered, my sense was that we could, in fact, see a little bit of backfill here and some profit taking over the next couple of days, and therefore the most prudent thing to do would be to simply cover one of our long positions and then raise our stop on the others. We pulled a pretty good profit on the first position. We pulled a very small profit on the rollover, I believe about $6, and we placed our stop just below the low of yesterday's candle, which is 12.36. I believe our stop is at 12.35.13. My sense is this: if the market comes down and continues to sell off, we will get stopped out, but we'll get stopped out with a small profit on our final position. If in fact the market recoups and breaks above this resistance area at 12.46, I would look to add to our gold position. In other words, buy another contract on that breakout to the upside with our new target of 12.61. For right now, we are long one contract and we have pulled profits on the other February position. Now, the only precious metal to absolutely buck the trend today was palladium. Palladium closing up about $3 at 1183.20. What is noteworthy as far as I'm concerned is the intraday high, as it touched just shy of $1,200 per ounce. It is coming closer and closer to parity with gold. However, I believe that we could see some sort of weakness come into this market, profit taking, because as I said yesterday, typically when you see a market move up parabolically, the fall is just as brutal. And we can see when we look at the basic tact or angle of this particular rally, it is pretty steep, starting from just above 800 all the way up to 1200, almost at a straight parabolic line up. I've seen stronger moves in palladium, but every time we've seen those kinds of moves, we've seen it come down aggressively. And to give you an idea of what we're looking at, we also went in and did a basic fib extension yesterday. And as I said, the numbers that came in as a 1-to-1 extension on this particular study was 1186 And so we actually took that out today on an intraday basis, but are currently trading below that. I wouldn't be surprised to see some profit taking come into the market and then resume its upward course. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.